When you go to retire, the first question that most people have is, where is my income going to come from? A lot of people's first instinct is to claim Social Security immediately, but that's not always the best decision for a number of reasons. And today I want to talk with you about the pros and cons of taking your Social Security early versus waiting and pulling from your 401k or IRA first. But first, my name is Justin Haywood. I'm a certified financial planner, and my goal is to help you make better decisions with your retirement savings. So let's say that you just retired and you're trying to figure out what the next step is. Where is that next paycheck going to come from? Let's say you've got a couple $1,000,000 sitting in your former employer retirement plan, but you know that if you get to 62 or full retirement age, whenever that time is, that you can always go to your Social Security check and turn that on. And maybe that's going to provide $3,000, $4,000 per month. And it seems very appealing because you don't want to have to draw from your retirement savings, and that experience of a steady paycheck will feel really good. So in general, you should delay as long as possible, but there are a few caveats, which we'll talk about in a little while. So first, let's talk about why it does make sense to delay your Social Security. Well, from ages 62 to 67 up to your full retirement age, there's between a 5 and say 6% raise each year that you wait to claim your Social Security. So if you can just get to that full retirement age, you're going to get a larger monthly benefit. Then if you can afford to wait even past your full retirement age, all the way up until age 70, each year that you delay is going to provide an additional 8% raise. Now, in the world of investments, a guaranteed 8% return is almost impossible to find. So if you're able to guarantee yourself an 8% step up on your Social Security amount every single year that you wait, that's a slam dunk if you can afford to do it. So that's the first reason that you should wait, is that every year that you wait, your monthly benefit is going to be larger. So if you think that you're going to live into your 80s or 90s, if you have longevity in your family, there's a good reason to delay as long as possible, because once you reach, say, age 80, 81, that's roughly where the break even occurs. You're going to make a lot more in Social Security in the long run, which I'll illustrate here in just a minute. So statistically speaking, if you make it to age 65, there's roughly a 25% chance that you're going to live to 90. And if you're married, if both spouses make it to 65, there's roughly a 50% chance that one of them will survive to age 90. So again, if you can afford to wait to draw your Social Security, there's a good reason to do so, to protect yourself from a longevity standpoint, to give you more income later on down the line. So real quick, I'd like to show you a real world example of someone that we're working with that they have not yet reached Social Security age, but we're planning their Social Security claiming strategy and what that will look like. So this is Tom and Susan. They're both 59 years old. Susan's already retired, and Tom wants to retire at 62. And they have about $150,000 in the bank, and they've got about $2.6 million in Tom's current employer 401k. So they're still a couple of years away from Tom's retirement. It'll probably be about $3 million or so in his 401k by the time he retires. And so they're trying to figure out what their optimal Social Security claiming strategy is. So what we can actually do is look at a couple of different scenarios. We can compare what does claiming at age 70 versus full retirement age, or claiming at age 70 versus age 62. We can look at various scenarios to see what the most optimal strategy is. So this here is comparing age 70 versus claiming at full retirement age. The gray bars represent full retirement age. The blue bars represent claiming at age 70. So if they wait until 67 to claim, they'll have a few more years of Social Security income before age 70. So the blue bars will take approximately until age 80, 81 to actually break even. And then every year thereafter, they're actually going to be ahead of what they would have been had they not claimed at age 67. So when we look at that until age 90, they would receive about $150,000 more of Social Security income waiting until age 70 versus claiming at full retirement age. Now, this is even more extreme when you compare claiming at age 70 versus claiming as early as possible at age 62. The same scenario applies, except that they started claiming at 62, and that actually results in about $705,000 more of Social Security income during their retirement years. So you can see just how powerful this can act as a longevity hedge. If you can afford to wait, you're going to get a lot more lifetime income from your Social Security versus claiming as early as you can, or even claiming at full retirement age. And again, Every year that you wait past the full retirement age, you get an additional 8% step up on the amount. And that can be really powerful, again, assuming you're living into your 90s. So it's clear why you should wait. It's a longevity hedge, and you'll get more lifetime income if you think that you're going to live for a while. But of course, nothing is black and white, and there are always caveats. And so I want to talk about a couple of those caveats here now. So the first thing to make sure of is that you need to make sure that you have enough in your retirement accounts to be able to sustain yourself while you're waiting. Waiting for your Social Security means that you're going to have to completely drain your retirement accounts and leave yourself with no more liquid assets. Then that's probably not the best idea. The last thing you want to do is completely drain your liquid savings while you're waiting for Social Security, then turn your Social Security on, then a big emergency comes up and you don't have anything left to sustain yourself to make up for some sort of emergency. So as a rule of thumb, make sure that the interest that you're earning in your retirement account, let's say you have $500,000 and you think you can earn 10%, that's $50,000 per year of interest, that's going to do a pretty good job offsetting your monthly expenses so that you're not tapping into the principal too much. So that's the first caveat. Make sure that you have enough retirement savings and you're not draining all of your liquid assets. Another caveat is if you don't expect to live a long time, let's say you don't have longevity in your family, or there are some underlying health considerations that don't lend themselves to you living a particularly long time. If that's the case, then you probably want to claim your Social Security as soon as you can. You don't want to wait until 70 and then you pass away at 74. So the earlier the better if you think there's a good chance that you're not going to live well into your 80s or even into your 90s. And finally, a lot of people have concerns about the Social Security system and how sustainable it is. And it's apparently set to go broke in 2032. Whether that actually happens or not is anyone's guess. When you're dealing with money, there's obviously the objective, quantifiable, factual side of things that should drive a lot of the decisions that you make. But you can't ignore the fact that there are some other subjective concerns. And if something like taking your Social Security earlier than the numbers suggest makes you feel better, I can't argue with that. So if you're uncertain about what the best claiming strategy is for you, I'd love to talk with you. That's exactly what I help my clients with here at Haywood Wealth Management. We specialize in retirement planning, Social Security forecasting, cash flow management, investments, and we can help you make the right decision as far as your Social Security claiming strategy. I'd love to talk with you. And if you'd like to learn more about these topics, I have a free webinar called How Tax Planning Changes Through 4 Stages of Retirement, where I talk about Social Security, Medicare, and a lot of other retirement topics that you might find important as you're getting prepared to retire. There's a comment pinned below and you can join that webinar there. So thank you so much for watching. I appreciate you tuning in. I'm Justin Haywood and I look forward to seeing you in the next video.